Good morning. Oh, sorry. What up? We're doing it 80 style. Wednesday, July 10th. Spotify. If you didn't know, Spotify was working on their comment section for the past couple of days. That's why you couldn't comment. They had sent me an email and I just ignored it. And then their help desk reached out to me because I submitted a ticket. I guess I'm fairly big on Spotify because they reached right back out. And who can get help on these platforms? But I got help. So I guess I'm a fairly big deal, not to quote Ron Burgundy. But I can reply to the comments now on Spotify. Most likely, just so you know, I will simply reply with that I'll put your request in the podcast. But I can also do short comments if you're out of your mind and, hey, what the hell are you doing kind of thing. If I get my old man style stuff on. But I can chat with everybody. So if you're listening on Spotify, first off, thank you. Second off, you can comment down below if you want me to take a look. I got asked just on YouTube Live, do I only do social requests from paid subscribers? No, I'm not in this for the money. I'm in this to try and help people. So if you need some help, just ask a question down below. Trust me, it is like Trendspider. Trendspider, my affiliate. I'm an affiliate of Trendspider. They have a contact us button in the bottom right-hand corner. You can't ask a dumb question. Trust me, they are so kind. When I was building this algorithm, I didn't really understand a lot about technical trading. I knew about candles. I knew about moving averages. I didn't know what I wanted to build my algorithm on. They helped me tremendously build that strategy. And it was of great, that's part of the reason I'm an affiliate with them. I will always be with Trendspider. Their customer service is top notch. So that's one of the things that I pride myself on is my customer service for anybody who listens is top notch as well. I'll be on Spaces on Twitter today with Wolf at 2 p.m. I did prepare some stuff, so it's probably stuff you guys have heard before. But if you want to listen and you want me to light up some kids, with some Haktua, hop on Spaces. I'll include the recording. I'll post it afterwards on Twitter as well. I don't like to promote it because it's very audio based. And since I've started doing video, I kind of like the charts and the newsletter and stuff like that. One thing I wanted to point out is that we are seeing a little bit flattening here at 500. I've said it before, and yesterday probably. At 500, you're going to see some resistance. We got to 500 yesterday in the morning candle. 500 was the high, not 501 penny, 500. When you get to those handles, psychologically, it provides some algorithms, some traders. It provides a natural resistance level. And your RSI is at 77. Your MACD is extended. This may be a sideways move. This may be a down move. Again, we're heading into earnings season. So I don't know what the Qs are going to do, but the Bollinger Bands are cinching up. When we cinched up before at 480, it just shot up. So I don't know if we're going to get a cinch up. I don't know if, the Fed's going to say something. Jerome Powell was speaking yesterday and kind of let the cat out of the bag that they probably will have to cut because staying higher for longer could hurt the economy. And he realizes that. So I don't exactly know what's going to happen, but keep an eye on it. I did want to point out in Seeking Alpha, you get this email every morning. If you import your portfolio, and I have the core portfolio, the 35 names, 36. I think there's a little bit more in this because I do track a little bit more since it's not public, but I track a little bit more. I wanted to point out what was interesting to me. My portfolio has a 3.68, which is pretty good, but 27 of these stocks are holds. Now, I won't go over exactly which ones are holds. If you want to see the core portfolio, if you are a Trendspider subscriber, you get access to that watch list. If you are not, then go over to Savvy Trader or go to my link tree. The link tree is the easiest way to do it. It's down here. It says Savvy Trader. You can follow my trades. It takes you right here to the core portfolio. Now, 27 of these 35 names are a hold. That's my point. Is that the quant rating in Seeking Alpha is saying, hey, maybe it's time to just hold. And so patience is what you want in a situation like this. You don't want to go out and go balls deep into something that's at all-time highs. You may want to add because long-term, I don't think it's a problem to add. But you may want to just cause some caution. Some caution. That's it. I said it yesterday. The consumer was weak and that any company that missed and guided lower would be killed. Well, what was one that got killed yesterday? HELE. This is Helen of Troy Limited, okay? This isn't a company that I would ever invest in. This isn't a company that I even knew existed. But if you're a kid like me, Vicks VapoRub, that's who this is. They have hundreds of consumer staple brands within Helen of Troy Limited. And it's a consumer company. What happened yesterday was they missed on revenues and they missed on EPS. They said the consumer is incredibly weak. This is a consumer staples company. This is a problem. It was down 20% yesterday. So when I said, hey, the consumer seems stretched, and this is not a high-end consumer brand. This is a low-end consumer brand. And I think that wealth gap, there's a wealth gap there where if you're a part of the upper middle class to wealthy, you're not feeling this economy. But if you're part of the middle class or lower, you're feeling this economy. So I'm kind of in tune with it. I'm a little bit out of touch with it. Again, my apologies for not really stressing about the money per se, but I think you want to be careful. And this kind of shows you between Helen of Troy and the quant saying, hey, 27 stocks, be careful. Doesn't mean that if you've got, $1,000 sitting in the bank and you want to put it into Amazon, doesn't mean you don't put that $1,000 into Amazon for the next 10 to 15 years or even 5 years. Doesn't mean that. It just means be very deliberate in what you're investing in now, because any trade could immediately go south on you with any bad news in this economy. So again, Helen of Troy down 27%. And what should you do at times like this? I said it before, and it was of importance last week and the week before when I said it. Have your list of 5 names. If the market pulls back, you should have a list of 5 names that you would immediately buy into. I have my list of 5 names. I am not putting them out there. I have my top 5 portfolio names that I don't get rid of. I absolutely just add to, Apple, Amazon, Microsoft. I don't think you'll go wrong. Google. I don't think you'll go wrong with any of those. QQQ. QQQ has access to all of them. NVDA. I think NVDA is cheaper than it's ever been. We'll go over that one in a little bit. One that I liked, but is a risk, is SOFI. I was listening to the CEO this morning. I really like this guy. I really want to invest in this company. But look at that chart. Do I want to buy a falling knife? No, I've said this before. I think this is a $10 stock. But do I want to go into something that is this week on a chart, and then I go and look at the financials, and the financials are even worse? The profitability on this company, they have an 82% margin, but their net income trailing 12 months is down 7%. So again, this is what I mean by being deliberate, by being intelligent in your buys. Put a time frame on it. I got to ask just, now on the YouTube Live about taking money out of my account to actually pay bills and live. No. And the reason was I had a plan for 5 to 10 years. I've been retired for 4 years now. I knew exactly what I was going to do for 4 to 5 years. Didn't work out exactly the way it was. Worked out a little bit better, but I had a plan. So having a plan makes it deliberate. And if you stick to that plan, we'll go over some of the trading quotes that I saw yesterday. But one thing that I wanted to point out to you, Google, I love Google. And this Capitalist Letters, this is a fantastic newsletter you should subscribe to. Now, Google investment case, not cheap, but exceptional. Shameless propaganda by momentum traders that Google is undervalued. This is pure nonsense, but I still believe Google is a great investment if it pulls back 15%. Here's why. Now, Google is at an all-time high. I think it's at an all-time high. We can go and look at Google. 190. Do you want to buy it? No. You want to be deliberate in when you buy this stock. Is it going to pull back? I don't know. If this is a 5-year investment, do you invest in it? Probably. But, when you take a look at this monthly chart and you look at it, it's continually going up. Is your MACD as high as it's ever been? No. Up here, it was 21 way back in 2021. Ironic, 2021. But when it was down here, right at the oscillator on the monthly, and the stock was at 95. Did you feel comfortable buying this one back in February 2023? If not, do not buy it at 190. The point is, if you have this in your portfolio, and this is what hold means, if you have this in your portfolio and you want to add to it, add to it. But hold doesn't mean start a new position. So I thought this Substack was fantastic. Now, Meta, is this a breakout? Is this bounce time? Remember, that old resistance turns into new support. And you can see the resistance right there. We'll blow this up a little bit more. The old resistance turns into new support. Where are you right now? Let's look at the 4-hour algorithm. Again, have a plan around this. If you don't have a position in this, I'd say hold on to it. Don't go and buy it when it's super, super strong. Now the RSI is at 64. Your Bollinger Bands are wide open. You're above that 9-day, so you do have confirmation. If you didn't buy at 475, do not buy at 530. You wait for the earnings. When the earnings blow it out, or if you come down before earnings, that shelf right here at about 500. That's where you want to add to this. You don't want to set yourself up for immediate failure if they come out and say, hey, we just spent $400 billion on NVIDIA chips, and then Meta goes down, but NVIDIA goes up. You don't want that. Now, I don't think this is a bad investment at all, but you just don't want to set yourself up at an all-time high where you're betting that, a year from now, this is going to be higher. I do think you're higher a year from now, but I don't think you set yourself up that way. I think you wait for weakness. Even if that weakness comes at $550 instead of $530, I think that's when you do it. Again, be deliberate in what you're buying. Now we talked yesterday about the MACD. What's this one? Let me see. Hold on. Maybe my notes are a little bit off. I didn't click on this one. Abercrombie & Fitch, market leader with a green inside day off support. Ironically, we can go and look at Abercrombie & Fitch. This is coming up in the scans. And this is one that I'm going to bring up on Spaces. This one's been trading sideways on this 4-hour algorithm. It got you in at 179. You're trading at 179. Now, we talked about buying on weakness. Look, did you want to buy here at 190? Well, maybe it made sense to buy at 190, and I would argue that you're going to get back to 190. The MACD, even if you bought here at 172, the MACD was up high. Did you want to buy there? No, you want to buy on weakness. So when these things show you weakness, you want to buy. 179, you wait for it to get some type of confirmation over that 9-day, and you go and you buy it. And then we pull back to 190. But, maybe 200. But you don't buy up here, you buy down here, and you want to understand it. Now, if you don't understand some of these factors like MACD and stuff like that, use YouTube. There are tons of free courses out there. This is one, Linda Raschke. Raschke, I think that's how you say her name. I don't know. It's a strategy called the anti-setup. I posted about it yesterday, how that SMB Capital had said she was a master of the MACD, and this is Trading Lab. Now, Trading Lab uses TradingView. You can just look at this and set this strategy up in Trendspider. You can set it up in Trendspider. I haven't done it. Will I do it? Maybe. Maybe I'll share it. If you do it, go and share it with the group. Share it, send it to me. I'll send it out to everybody. But again, this is a strategy that made her millions of dollars, not billions. But you can watch this and set it up. So understand what these things do. Now this is just a great list. This is a great list of stocks with implied exposure. Oh, I do want to read this quote before I go on. We do have earnings. And if we go and we look at Earnings Hub this week and we look, the bank earnings are coming up. You do have tomorrow before the bell, you have Pepsi and Delta. And I wrote in the paid newsletter which one I like, and I went over all of these charts and stuff. But I did want to, bank earnings are coming up on Friday. And this is the quote that I wanted to read to you. It's almost impossible to have a bull market without financials participating. It's a sprawling sector with diverse industries, including banking, insurance, capital markets, financial services, and real estate. Within banking alone, we can distinguish between the too big to fail money centers and the old school regional bank lenders. Although it's number 3 in year-to-date performance with a gain of 11%, the financial spider sector, XLF, has been trending sideways to negative since April. So how do you want to trade that one? Well, again, if you think that we're still in a bull market, this XLF needs to take off, and we talked about it yesterday. We talked about it when it got this cross up here at 41.12. When it got this entry, I said, hey, I think this is the start of the next leg up. Well, where are we right now? We're at 41.64. This was gonna be a resistance level. It's still a resistance level until it's not. And I can't tell you that it's not, because look, we spent from May 15th to May 24th, so about 10 days above that before. We spent, let's see, about March 28th to April 9th, we spent above there before. So you're going to have to put in quite an extended rally above this 41.74 to actually say, yes, the banking sector's in a bull market. But I would argue that Citibank is your best bet in here. Now, do I know that they're going to do blowout earnings? No. They reported $1.58 last time. Their expected is $1.43. That's lower. The reported last time was $21 billion in revenue. They're expected $20.08 billion. That's lower. So again, with that quote about the financials, I wanted to put that one in there. This is a great list of AI exposure that's over-implied, equal, under-implied, just based on the price points. Now, what's the consensus estimate is greater than market expectations? Meta, AMD, Pinterest, Snap, blah, blah, blah. What's the consensus equal market weight? Google, Amazon, London Stock Exchange Group, Marvel. What's the consensus in less than market expectations? Microsoft, NVIDIA, Tesla, Taiwan Semi. So take a look at this article. It's a good one. Again, use the tools that you have. Let's talk about chips. Venture capital firm A16Z stashing GPUs, including NVIDIA's, to win AI deals. What are they doing? They're trying to basically buy up NVIDIA chips so that when an AI startup says, hey, we need some money, this is where they'll go, because you know what? We have NVIDIA chips that we can give you. Instead of giving you money, we're going to give you NVIDIA chips so you can run your own large language model at your location. There you go. And this is not good for NVIDIA. This could hurt NVIDIA, because this could mean that the last H100s that they sold, that they're hoarding them, and that people are hoarding them, and that we have an overabundance on NVIDIA. Now, do I think that's the case? I don't think so. But watch your NVIDIA. I do think that 133, where it's trading right now, is a perfectly fine price. Oracle dips on potential server deal with XAI falls apart. Elon said we're going to do it ourselves because we can respond faster. I mean, that's as easy as I can say it. The cloud may be doing this AI stuff as a backbone, not necessarily as the front bone. I like that term, front bone. But again, Elon thinks that they can do it. It's an interesting. They will build their own center. Huge for NVIDIA, because again, NVIDIA chips. That, you know, Oracle's not the only one buying the chips. It's gonna be the meta players, the mega caps. It's gonna be XAI. It's gonna be Meta. It's going to be Amazon. It's gonna be Microsoft. It's gonna be those guys that have the cloud business. It's gonna be everybody. Amazon released a new chip. Big deal. The biggest deal on Amazon, and I've said this for the last 3 days, and Jeff Bezos said he's selling more yesterday. Okay. Bezos sold $863 million yesterday. And again, not a single share below 200. That's the lowest price he's willing to do. So how do you want to play this? Again, you're trading at $199.99. The second it goes over 200, Bezos sells hundreds of millions of shares. And so that's going to be a cap. When you get to the time where Bezos isn't selling, that's going to be the time when it takes off. Do not wait. Is it coming back down to 188? I don't know. But that is your support level right now. Okay? You're building this shelf up here at between 198 and 200. Add to it. This is a great chance to get in for a long-term buy. Do I think it's going to come down? I don't know. But I'm adding to this position. I sold at 176. It's now at 200. I'm going to add more here. And I can't, I'm not guiding you in that you absolutely should do this. It depends on your time frame. It depends on your financial situation. I'm simply saying this is what I'm going to do. Do I know that it's the right strategy? I don't know. Every strategy that I take, including every 4-hour strategy that I take, it's a risk. You have to make a risk in the market. Now, I think this is a calculated risk. I think it sucks that he's selling this much. He's not even close to done. He's selling $5 billion's worth. He's only sold about $2 billion's worth. So he's only halfway through. This could be an extended period here at 200, and you have earnings July 29th. Maybe they make mention of it. Maybe they don't. But again, Amazon, in my mind, is a buy. Apple ticks up as Needham boosts price target on the back of a $110 billion buyback. We've gone over this before. The reality, $110 billion is nothing to a $3 trillion company. That's like you cutting your grocery bill by $5 a week. That's essentially what they're doing, $5 to $10 a week. It means nothing, but the price target was raised from 220 to 260. Do you want to buy here? In my mind, I think it's too strong. We talked about patience. We talked about buying on weakness. I don't care if the weakness comes at 250. I don't think adding at 230 is smart right now. The RSI is at 76. You're completely oversold. If we have any kind of pullback on this one, you're pulling back to about 220. 220 becomes your resist. It went right through 220. 220 right now is your support. So if you're comfortable buying at 230 and not at 220, buy at 230. But again, I think you'll have the opportunity to buy at that 220 at some point in time. This one, it's not a weak stock by any means. This is an industry leader. I am talking you to recording on an iMac, with an iPad Pro, with an Apple Watch, with an iPhone, with AirPods Pros sitting in my the other thing, with Apple TVs all around this house. I've got Apple stuff all around. They make money off me left and right. But yeah, I just don't, again, patience. This valuation is nuts. The growth, I would rather have you buy this at 250 after earnings when they say we saw a revenue growth. Then see you buy at 230 and it come back down to 200. So again, you just have to make sure if you have this stock and you own this stock, say you were smart enough to buy in the 4-hour algorithm at 169. Say even you were smart enough to buy here at 185. And I said, hey, there's a little bit of problem. You don't have confirmation, but you just said, you know what? YOLO. You Leroy Jenkins this motherfucker. You went in and went Leroy Jenkins. And for those of you that don't know Leroy Jenkins, just look it up. It's a great Warcraft or something. I don't know, video game. Leroy. But yeah, you Leroy Jenkins this at 185. Are you upset? No. That's the way you will be if you buy it at 230. But do you want to start a position here? I'd say no. Again, I think you want to wait for some of these fundamentals on the earnings to come around. The growth is where you're going to get screwed. I mean, the growth, if they don't have revenue growth year over year and they don't change this and they don't up the guidance, again, everybody's banking on the iPhone upgrade cycle. That's what they're banking on. But again, we point to patience in this market. Now, Tesla, it might be time to trim. Look at this. Over 56 bars, 2 months. This is a daily chart from Trendspider. Daily, 56 bars over 2 months, you were up 96%. Boy, 56 bars, you're up 104% to 288. Maybe that's a little, hey, we might get to 280 and you might want to trim this. I would argue if you bought this at 160 or something back here, I think it was 160 was the low on the algorithm. I said 139, that 140 provided you some support. And then you got a gap up, and then you had this sideways move that I didn't trust. And then once you trusted it, at 200, I said there was resistance. I have been resisting this the entire way. I said that this 263 is going to provide you some resistance. It is. But if we get to 288, that's the time when you want to pull back. Now, am I selling this? No. Am I going to trim this? No. I am going to trim it if we get back to about 250. And then I'll start selling in my parents' account. I own Tesla through XLY. My parents own a bunch. This guy, Bill Gross, argues Tesla is a meme stock. It's acting like a meme stock. And he brings up ZAPP, which was up again. I mean, God, what's ZAPP up now? Let's see. ZAPP is up 181% today. 181% today. It's up at 1147. Again, if you listen and you trade, we talked about ZAPP. ZAPP, and I'll bring this up again. I'm not putting this in the newsletter. This is too dangerous of a stock to put in there. This 5-minute algorithm here, I like the entry. And so the entry has the ability to make you money. I don't like the exit. So when you see an entry here in like 11.95, and we talked about meme stocks, this is a short squeeze, and this has been going up. Now, it's going down right now, and you can see it live here. But when you look at this $11.95 buy, did you want to buy it? Well, it had some confirmation, but it didn't. I would have put a stop loss at probably about $11.50, maybe $11, depending on how much you wanted to lose, you were potentially willing to risk. And then I would have probably sold it here when it lost confirmation at about $13. Now, would I have gotten back in here after it had confirmation? I would say, you know what? It got me out here, but I don't trust the out, so maybe I should still be in. It has confirmation. I'm going to buy again. And you're going to buy, and then this one here at 15.20, maybe you got out, at about even or so when it got but then you buy in again. Again, this downslide, I would have said no to this entry. I would have said no to this entry because you're too close to the open. Again, patience on these things matters. And so is Tesla a meme stock? I don't think so. ZAPP is absolutely a meme stock. Now, we're going to talk about NVIDIA. NVIDIA to 180. KeyBank came out with a huge upgrade on NVIDIA to 180. And do I think NVIDIA is going to 180? I think so. And let me tell you why. We're not going to use the 5-minute setup for this. We're going to use the 4-hour. And the 4-hour, again, you want to change your strategies depending on the stock. It's not the same strategy for every stock. You want to change it. And so here we got the buy-in here at 128. Is it too late to buy this one? No. You have confirmation. Your Bollinger Bands were cinching up. They were going. When you look at the weekly, yes, it looks extended. Okay? But then you take a look at this and you say, is NVIDIA too extended? I want to take a look at the valuation. I've posted this many times before. How the valuation and the growth is still good. Your valuation, even though it's a high PE, your forward peg is 1.47. That's below the sector at 2. The valuation is not horrible. The profitability, they have a 75% gross profit margin. That's the highest it's ever been for this company. So you're taking a risk because we went over how there's the potential that they have chip hoarding and that they're going to go through this cycle where they don't have as much chips. But I think the upgrades in chips is going to keep people hungry. And so what you're waiting for is at some point in time where Meta, Amazon, Google, one of those cloud providers says, I think we have enough compute power. Maybe we have enough compute power. So one of the things that's going to push NVIDIA, Steve Grasso said, by the way, on that clip, he bought at 130. He added more at 130. Is it bad to add at 133? No, I'll probably add today. Taiwan Semi sees robust Q2 revenue at AI boom. This is Taiwan Semi's earnings. Now, Taiwan Semi from Wall Street, it's a strong buy. We can go and look at the price target. But they showed 32% year-over-year jump in revenues, following year-on-year growth trends in the previous months. The giant chip maker that supplies the world's biggest tech companies, Apple, NVIDIA, see a massive surge in Q2. They have pricing power. If we go and we look at Taiwan Semi and Wall Street, what's the price target? It's 190. That's where you're trading right now. With this new earnings, you're going to see a whole bunch of new price target raises. And when you look at the profitability, okay, they have a 53% margin. They are going to push that up. They're going to tell NVIDIA, you know what? You've now got a $3 trillion market cap. You can afford to pay us more. In order for us to make your chips, you're going to pay us more. That's what they're going to do. Now, some of the most recent tech sector quant upgrades that are in Seeking Alpha, I can't provide you. They have told me I can't. But let me go over them anyway. Spotify is the top one. I saw a analyst yesterday on CNBC saying this one has huge potential. I'd say it's a little bit, you want to get back to that all-time high. You're probably going to need to. And so if we go to this weekly and we look at it, you still got some movement up to that all-time high at 310. Now, is it expensive? Absolutely, it's expensive. We can go and look at Spotify here. But again, does this one ever trade on value, on valuation? No, the profitability sucks. But the quant rating has it as buy. Again, that's a top one. Another one, Fortinet. Fortinet is in cybersecurity. This one has been beaten down. It's at 60. I bought this one at 60, rode it to 67. What's the Wall Street price target? When we go to Wall Street, it's 71, 20% above. That's a good one. First Solar. This one is, Florida Power and Light. They're due solar. What's the average price target? 285. You're trading at 227. So again, you want to take a look at these. Arista Networks. Corning, which was yesterday. GLW. This one got a whole bunch of upgrades. Even though the average price target is still down at 40, it's trading at 45. I would argue. We went over this one yesterday. I would argue you're getting back to the highs. And that high, I think, is 46 or something. I think I put it on here. It's at 46. Maybe I didn't put it on here. Did I put it on the weekly? Let's see. That high is up there at 46.90. So this is one of the ones that's a high one. SMCI, Cloudflare, Net. You want to look at those things. Again, if you don't have Seeking Alpha, go over here to the link tree. It's the second link. You're going to save, I think it's 20% off your 7-day free trial. And you get a 7-day free trial, $25 off. Sign up today. You'll get, again, I can't live without this quant rate. I'm not great at fundamentals, but I love that quant rating. We can talk about Taiwan Semi. They beat Pepsi, Delta report before tomorrow. As far as earnings goes, some education quotes that I wanted to kind of put in your head. As far as, again, being patient, successful traders just focus on a few setups and a small watch list. Don't overcomplicate things. It's from Steve Burns. Another one of his that I saw yesterday, successful traders see losses as part of the process. Unsuccessful traders see them as failures. Again, part of the process. AlphaPix sent me an email yesterday concerning some of the losers in their portfolio. They're going to have a portfolio update. There aren't many, but what I like about AlphaPix is they address the losers and they basically tell you why they're still in the portfolio. Again, we went over this yesterday. I went over how AlphaPix gave me a sell on BCN or something like that, a stock that I'd never heard of, but they were up 20% over the course of a year. That is fantastic. And they got out of it because the fundamentals changed. This is a portfolio where you get one on the 1st, one on the 15th of every month. Every month they give you two. When it's time to sell, they tell you when it's time to sell. When it's time to trim, they trimmed SMCI for a nice 980% profit. And they did that, I think, back in February or something. But from July 1st until April 17th, this, 4 times? The S&P AlphaPix is a fantastic portfolio. If you don't want to do your own research, this is the way you go. AlphaPix. Again, I'm an affiliate for 3 main products. There's Trendspider, where you get my 4-hour algorithm. And that is the number one. The reason it's up top there is because if I had one tool that I would buy, it would be Trendspider. They don't pay me the most money. In fact, that's the least amount of money that I make. But they are the best tool that I have in order to protect myself and make myself stay patient. It is Trendspider. $53 a month. You get 6 months free when you pay annually. $53 a month. Again, you get my 4-hour algorithm. What do? You go over here to Linktree, you sign up on that top link, and then you use this email address right here. Email me a screenshot of your account, and I will send you everything to import. The second thing that I promote is Seeking Alpha Premium, and that is the tool where I use the quant. That is where I found out that 28 of my core positions are a hold. That's where I want to be patient. If 28 were strong buys, I'm pouring everything in the market. Again, I'm pouring everything in the market. So that's how I use that tool. And it's to look at the fundamentals. And then AlphaPix just give me ideas. Now, I will post this in the newsletter. Again, the newsletter is 100% free. How do you get in the newsletter? It's down here. The Daily Stock Picks newsletter is right after signing up for Webull because I love Webull as well. I use Webull on a daily basis when I'm out and about and I want to look at the chart. It is the best on the mobile platform. And so I just put $1,000 into Webull. I didn't load up that account. Today it's worth like $7,000. But I don't load it up. I just keep that money in there. I trade every now and then. I own iBit in that account. I own Apple in that account. I own Uber in that account. I think I have several others like, I think I have Spotify in there as well. I think I have Snap. I think I've got a couple of those. I think I've got Ford in there, which was on a tear. But yeah, I've got Webull. But if you just want this third one, Substack. And when you go to Substack, all of this stuff is for free. The daily one is for free. The weekend one is paid. But I will post this, and this is a key. Okay, Steve, New Trader U posted this one. Steve Burns, he posted this. How much a stock or a trading account has to recover after a loss to get back to even after a loss based on percentage. Okay, now we're going to go over this. It's going to be a little bit confusing, but when I post the actual thing in the newsletter, you're going to be able to understand it. A 10% loss requires an 11% gain to get back. It's not bad. 10%, cut your losses at 10%. It only requires you to gain 11% on the next one. A 20% loss requires 25%. Here's where you start diverging. A 30% loss requires a 43% gain to get back to even. A 40% loss requires a 67% gain to get back to even. It goes down from there up to, if you lost 90%, okay, we had a meme stock. We had a stock yesterday where somebody put in like $1,000, and then they're down to 60. If you lose 90%, it requires you to make 900% gain to even get back to even. That's where the risk comes in. When you start risking that much in order to try and gain your way back, that's where you're going to lose your account. That's where you're going to start blowing things up. So I got a social request from Brian yesterday on Facebook. I don't even think he was asking me about this one. But what was interesting was he brought up this stock, PSIX. Okay. I looked it up in Seeking Alpha, and I said, you know what? They like it. Here's an analysis of it. And I'll put this in the newsletter as well so you can read the analysis. But when you go and you look at PSIX, you can look at it. It's a strong buy in the quant. And you take a look at the analysis, it's ranked number 1 out of 12 in the heavy industrial equipment. Brian got into this one, he said, at about $4, $1. I don't know. I bought PS a week and a half ago. I'm up 100%. Great company, just paid off their debt in record time. I think this one has a lot more room to run. Put it in the retirement account to avoid tax implications and cash out if needed. Their financials are great. Let's look. Financials, valuation an A. The PE is not extended. It's a 10. The PEG ratio, it's a 0.15. That's 84% below. Profitability, A. The 24% margin. That's good. Sector's making 31%, but you look at these net income margins, you look at the levered cash flow, and you look at the return on capital, that is fantastic. Momentum, it is unbelievable. This is up 453% in 3 months. Okay, when you find something like this, you take a look and you see, okay, is this something that I want to invest in? So let's look at PSIX right now in Trendspider. This is how you use your tools. So in the 4-hour here, you can see the algorithm gets you in pretty early. We're going to look $2.20. Okay, it's at $12.70 now. Over 2 years, 31 months. 31.6 months. So it hasn't even been out there for 2 years. It's 31 months. How is that 31 months? Why does this go back so far? I don't know. But back testing 31.6 months. It's usually 24. I don't know why. Oh, is this a SPAC or something? Nah, we're not going to change it. But I'll put the performance in. If you have Trendspider, you can look at it. It's extended. Do you want to invest here? I would argue that when you find something like this, and the valuation makes sense, and the growth makes sense, and the revisions make sense, and everything looks good, then yes, you want to invest in this one. When we scan a look out, it's probably got more room to run. Let's take a look at a monthly chart, because this one goes back quite a bit, and we can go back quite a bit. Look at that high back here in 2014. You've reached up here at about 11. You've reached your first resistance level. So in my mind, I think the second resistance level is 21. You could double in this one. Again, the financials make sense. You could double in this one. How do I find this stuff? Well, take a look. If we just look and we say, okay, where did it reject here? It rejected at $12. Okay. That's at $12.65. It's trading at $12.57. It rejected right there. You can see how it pumped up here to $13.20, right? Well, where's the second time where it pumped up and then pulled back? The first time was here at $20. It looks like this one was $20.97. So $20, say $20. Just say 20 or 21 bucks. Okay. That's doubling here from about 11. So if you get in here and you go down, where would I put my stop losses in on this one? If you're trading this one, I would probably put my stop losses at the time where it pumped up here, and it pumped up here to $8. Okay. $8. Put your stop losses in at $8. And that's where I would trade this one. I would say, okay, I'm going to buy at 12. If it pulls back to 8, I'm going to make the decision. Do I buy more or do I get completely out? That's what you're going to do. And so, Brian, fantastic find on that one. Now, the scans. Every day in the newsletter, I put scans in. You can just scroll down to the bottom. What these are stocks that show a bullish trend in my 4-hour algorithm in Trendspider. So if you don't have Trendspider and you want something for free, just go down to the bottom and then you can chart them. I want you to have your own charting program. This is just stocks that show a bullish trend. So let's take a look. One that just got asked about me was ITB. This one showed up on our scans today. ITB. We can type in ITB and you'll see an entry into this from the 4-hour algorithm. Now, do I want to get into this one? I am holding this one, I think at about 106, 105, somewhere in that neighborhood. I added to it here. It had some momentum. I didn't get out when the algorithm told me. The 50-day moved down a little bit. I am a little bit worried about home builders. And so am I getting into this one? I'd like to wait for this one to show some confirmation. Simple as that. Do I rely on this algorithm 100%? No. If I was, then I'd be using a bot on this one. And you can do that in Trendspider as well. You can use bots to trade. But FAST, F-A-S-T, this is one that got another buy. And this one got a trigger in the algorithm. And right here, it got you out yesterday and in. What does that tell me? It tells me that this MACD is going up and down because this with a couple of moving averages, this is what the algorithm is based on. I wouldn't get into this one. You have earnings coming up. I like this one to maybe get back what it lost on its earnings. But right now, I don't know enough about the company. I'd have to do a little bit of look. Again, the scans are there for you. If you want in the free newsletter, I'll be on at 2:00. If you have any questions, hit me up. Again, everything is here on the link tree. You can sign up for Trendspider. You can even send me a gift through Venmo, PayPal, Cash App. If I made you some money, that's all I ask. I'm your bartender. So just give me a little bit. When you make money, just give me a little bit. I don't ask for money. I just try and say, hey, if you want to show your appreciation, I'm certainly appreciative. But if you buy any of these products, I'd much rather have you buy the tools and use the tools than give me one of these gifts. Okay? Or just follow me for free and just, glom on and take the free advice. Have at it for what it is. Again, Apple is up 1.12%, so my portfolio is probably way up. Okay. It's Wednesday. It's hump day. I will talk to you later. I apologize about the middle of the road there where I kind of lost my way. Okay. See you. Bye. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.